I am 100% certain that we are at the end of that system. And I will tell you this too. I am 100% certain that the system died in 2008. And they had started, if you read the How to Create a Mint by the NSA white paper, they told you about the digital currency coming in. And then I think it was 1998, because that was 96. And I think in 98, don't hold me to the date, but I'll be pretty close. There was a peer review paper that came out on smart contracts and how that would layer on top of these digital assets.
Welcome back, everyone. And if you are brand new here, you picked a seriously interesting day to show up. Today, we are watching Lynette Zang, a woman who has been studying currency life cycles since 1987. And in this video, she is making some bold claims about where gold, silver, and the entire global monetary system are headed. She is talking about a structural collapse that she says has already started. Why physical precious metals are the only real anchor when confidence in the system disappears. And what a gold revaluation could actually look like in dollar terms. Whether you fully agree with her or not, the data points she brings up are worth every second of your attention. Do yourself a favor and stay all the way through this one, because the points she makes in the later sections are the ones most people completely miss. And that is honestly where it gets most interesting. Before we get into it, drop a comment down below and let us know where in the world you are watching from right now. Seriously, every time we ask this, the replies blow us away. So let us see where the Sound Money community is tuning in from today. All right, let us get into it.
Hi guys, my favorite day of the week because I get to spend it with you, and I have some very exciting news to tell you, finally. So before we begin, guess what? I'm going to be in Auckland on, when am I going to be there? March 28th, downtown Auckland. So from the Southern Hemisphere, March 28th, can you go a little faster with that piece, please? Okay, so this is going to be a brunch and learn with Lynette. It'll be very limited seating. I really wanted this small and intimate so that I'd have a chance to talk to everybody. So it's a gathering. It is not a big conference, but we want to make sure that we have meaningful discussion. Just not so much about, it can be about anything you guys want. I mean, that's what I'm there for, to answer any questions that you have. We can talk about the global monetary system, the big shift from the paper to the physical markets. We'll see where we're at that time and what it means for individuals and families. But mostly, I hope you join us. We'll have an early bird special and then on this. But again, it's going to be very, very small and intimate. I want to have the opportunity to talk to absolutely everybody there. We'll begin with a meet and greet at 10:30, and that'll be followed by a focused presentation, but short. And then, of course, I'll be sitting at all your tables. It's just going to be very small and intimate, so bring your questions. We'll be doing that at 11, but I'm telling you, we have intentionally limited the seating so that we can preserve real dialogue and give everybody the time that they need. So, ticket sales go live on Thursday, and there will also be a preferred early registration rate that's available during the first week once tickets open. So don't hesitate, because when I tell you this is just a very small group, it is only going to be a very small group. So be sure to save the link in the description, or you can scan the QR code so you can secure your seat as soon as registration opens. I'm very excited about it because I'll get to see you face to face, and I'll get to spend time with you and in Auckland. So let's go ahead and begin with what's going on, because obviously we know there are tons of things that are happening right now. So income down, prices up. Guess what? I want you to imagine for a minute that there is a massive concrete dam that's holding back rising reservoir. From a distance, everything looks solid. The water seems calm. The structure looks strong. But when you walk up close, that's when you start to see those hairline cracks, tiny little fractures, a little seepage. Nothing catastrophic, at least yet, but enough to let you know that there's pressure that is behind the wall that is building. And I hate to tell you this, guys, but that's where we are right now in the economy. GDP growth is slowing. Income gains are falling behind inflation by design. That was right out of the chute. But now affordability suddenly became a word, and it's just getting worse. It's not getting better because inflation, when they say inflation is down, they're just talking about the rate and speed of the inflation. By design, the value of all of that fiat money, that government debt-based money.
7 straight months. 7. That's how long over 46% of Americans have been saying high prices are destroying their finances. This isn't a blip on a chart. This is a pressure crack running straight through the foundation of the economy. GDP is slowing. Real wages are falling behind. And every time someone tells you inflation is cooling down, remember, they're talking about the speed of price increases, not the prices themselves. Everything is still going up. And here's what nobody wants to say out loud. The tariff chaos isn't over. It never left. It just changed lanes. One legal tool gets blocked, another one activates within hours. A confused public does nothing. And that frozen inaction, that's exactly the outcome they're counting on. While everyone is distracted, the purchasing power of your money keeps bleeding out quietly. The data is telling you the truth right now. The only question is, are you listening?
Do you think we may be near the end of that system? I am 100% certain that we are at the end of that system. And I will tell you this too. I am 100% certain that the system died in 2008. And they had started, if you read the How to Create a Mint by the NSA white paper, they told you about the digital currency coming in. And then I think it was 1998, because that was 96. And I think in 98, don't hold me to the date, but I'll be pretty close. There was a peer review paper that came out on smart contracts and how that would layer on top of these digital assets. They were preparing for it. They didn't know exactly when they were going to need to pull it out, but they 100% knew in 2008 that the system died. And it is not a coincidence that Bitcoin was born in January of 2009 and quantitative easing was born in March of 2009. None of that is a coincidence, in my opinion. I can't prove it, but I don't know. If it quacks like a duck and it waddles like a duck and it lays eggs like a duck, it could be a pigeon, but it's probably a duck. So yeah, we're at the end. And Carrie McGee, 4564, hi Lynette, is your company able to set up like a Glint card? No, we don't work for Glint, but I know Jeremy quite well, and I think that there are some people that have done so, but we don't set them up. That's not really our area, but we can tell you how much you should have based upon that first layered approach to barterability and liquidity. So we can let you know how much of that you should have. And Kathy Piscatello 3369 asks, how is this reversal in tariffs by the SC going to affect precious metals and other markets? And again, who controls COMEX? And by the way, how can the U.S. revalue gold and not other countries? Thank you. Wow, there's a lot in there, Kathy. So let's break it down. Okay, how is this reversal in tariffs? Well, Like I was talking about, he's got 7 different means. So there's 8 different ways that can be tariffed. The last one was created in I'm pretty sure it was 1913, right around there. The Trading with the Enemy Act, which is still in force and still gives the government the right to confiscate your gold, your silver, and anything else that they might want to confiscate. So it's not really a reversal in tariffs. It's just more geopolitical chaos, right? And more tariff chaos. Because now, since the Supreme Court said, oh, well, those tariffs are illegal. Well, now we're going to have a whole bunch of stuff in the courts as countries and entities, as we saw earlier, governor saying, we want a refund on all of the increased costs associated with those tariffs. Because much as they want to tell us that the tariffs are not a tax and they don't push inflation, that's simply not true.
Here's the statement that should stop you cold. The system died in 2008. Not slowed down, not stumbled, died. And everything since then has been an elaborate act of resuscitation using debt, printed money, and manufactured confidence. Now think about this. If gold would need to reach approximately $135,000 per ounce just to cover existing U.S. debt today, what does that tell you about where we actually are? It tells you that physical gold right now is one of the most undervalued assets on the planet relative to the debt sitting above it. And the old saying holds completely true here. If you don't hold it, you don't own it. Digital entries, paper promises, account balances. Those are IOUs inside a system that has already structurally failed once. Hopium is not a strategy. Watching and waiting is not a strategy. The window to position yourself ahead of this transition is open right now. But windows don't stay open forever.
$10 trillion. Here's a Vietnam, a $200,000 dong. 200,000 dong, rather. This is 1,000,000 bolivars. The numbers mean nothing. It's what you can do with them. And what's the difference between this and this? There is no difference. There's absolutely zero difference except for the fact that you'll work for this. You'll play with this. But this is just a tool to rob you of your wealth and your time because you're working for less and less and less, even though you don't realize it, but that's the inflation. That's what they cannot do with this or this. And it's only because of all of those demand dynamics. So don't be discouraged, Lori. Don't be discouraged. Learn to identify it because we're going to use it through this whole entire trend cycle. And I can guarantee you, I cannot give you a lot of guarantees. I can guarantee you I'll show up and do the work. I can guarantee you that at some point, these will go to their full fundamental value and they'll go past it because that's what always happens. Always, 100% of the time. I just can't tell you it's going to be Tuesday morning at 8:35. But it doesn't matter. This is the opportunity to continue to accumulate because we are moving into a new system. So do we have any other questions? Oop, okay. Yep, we do. Okay. Oh, okay. No, the other way. There we go. Bernito 128. Hello, Lynette. Thank you for sharing all of this information. Can you please explain what you mean when you're talking about higher highs and lower lows? Are you referring to the spot price? Yeah, but that's true for whether it's stocks or bonds, interest rates, whatever. And when you see, nothing goes straight up, nothing goes straight down. You always have to have bouncing along the way. And so in a positive chart, then you see higher and higher lows. And if you keep getting higher and higher lows, I can guarantee you're going to get higher highs, and vice versa. And this is what's been true with interest rates and also with purchasing power. What you keep getting is lower and lower highs. You're going to get bouncing along the way, but a negative trend is when you get lower and lower highs. And I can give you this guarantee. As long as you keep getting lower and lower highs, you will get lower lows. So with the manipulation in the markets, they can postpone things looking like this or that or the other thing. But that's how you know, are you in a positive trend or a negative trend? And then on top of that, how much is this asset really worth? Because if you look at the charts on the gold and the silver, and I could, if you want to, just let Tom know and he'll let me know, but I could easily do a technical lesson, and maybe we should just do some and have them in an archive, right? Or in a all of these different cup formations, the higher and higher lows, all of that. We'll do a little series of them that we'll hold on the YouTube channel in the what's that called? Group? In a playlist. So we'll do that so you can see it. But yes, I'm referring to not just the spot price of gold and silver, but that refers to everything.
$6.16 quadrillion in derivatives. Let that number breathe for a second. That is the shadow sitting over every stock, every bond, every digital asset you think is protecting you. And when Lynette says 100% of the time all assets return to fundamental value, she's not being dramatic. She's reading history. Every single currency reset, every collapse, every transition, gold and silver came out the other side holding purchasing power, while paper went to zero. We are watching that same story begin again right now. They want you digital. They want you trackable. They want you dependent. But physical gold and silver exist completely outside that system. No counterparty, no password, no freeze. You either own something real or you own a promise from a system that has already broken once. The cracks are visible. The data confirms it. The only move left is to build your foundation before the rest of the wall comes down. So what do you guys think of this? Leave your thoughts down in the comments. Please like and subscribe, and I will see you in the next video.